Our next guest, we have an exclusive interview with TradeStation. I'm going to bring on James Putra, who is the Vice President of Product Strategy at TradeStation. I see him there. And Scott Melker, who you already saw, Wolf of Wall Street. There he is. Guys, well, Scott, welcome back. James, welcome.
Thank you. Pleasure for having us. And see, we all got the black T-shirts again.
I think James and I are now 4 for 4 on interviews that we've done like this. We're wearing the exact same clothes, and slowly my hair is growing as big as it, just maybe in the opposite direction. But maybe we need to stop talking so much, James.
Yeah, James has grown an extra inch, I think, with what he's got going on. But it looks good. Looks good.
Goals. I have goals too.
All right, I'm going to let you guys get to it.
Thanks, Spencer.
What's up, guys? Glad to be back today. Thank you to Benzinga, obviously, for doing this. As I sort of alluded to, James and I have sort of an ongoing every few months conversation on different stations about what's happening in the market and specifically how TradeStation is approaching that. As you can see, he's the VP of TradeStation Crypto. So first, James, I think we started talking probably almost a year ago. We've had some crazy cycles since then, obviously. And you and I have consistently talked about what the big trades are, what institutions are doing. But I'm curious, I guess your general thoughts right now, what's happening in the crypto markets? Where are we in the cycle?
So thanks, Scott, for chatting. And yeah, it's been an amazing year and a half. I think each time we talk, something exciting is happening. There's a lot of really interesting things happening under the hood, depending on how you're looking at the market. So we've actually been using a lot of exoblock data to get some details into the derivatives market. And one thing that's been pretty interesting is to watch the basis trade and see how that's been playing. If you go back about 2 months ago when we had the big sell-off, the basis trade was the canary in the coal mine. And that came off, basis trade flipped, and then we started to see some rotation of the call, flipping of the call and put spreads, and then further spiraling sell-off and deleveraging. Well, now we're starting to see the basis trade come back into play. From an institutional side, we're seeing the counterparties we interact with definitely picking up an interest towards borrowing and lending and getting more towards taking advantage of the basis trade. So that's quite a awesome thing to see. We're also seeing companies like MicroStrategies come in and take on the bid. And additionally, we're seeing the call put ratio around 2 to 1. So that's really like for every 2 calls you have 1 put. So that's typically a sign of a confidence in the market. If you look, though, you're going to see that going out to September, the most actively traded calls are 50 and 60,000. So there's an interest in the market to see the market go higher. But when you start looking out a little bit further, you're seeing a lot of calls around 200,000 out in December. And so what's really, really interesting about this is when people buy calls on an options contract, they buy calls from a market maker. Behind the scenes, when the market maker sells the call to the trader, they have to go and buy Bitcoin. So all the calls that are being sold out of the money are causing Bitcoin acquisitions on the market maker side. And typically, you're not talking about individual retail investors that are buying these out of the money calls. It's going to be larger firms and buying at size, which is so quite interesting. I think that we're definitely seeing accumulation, definitely seeing short supply shocks where there's not a lot of crypto to go around. I think we talked about a couple of different reasons why that's happening, but definitely an interest in the space, and we're excited to see how much further this can go.
For people here who may be new or not traders and just sort of superficially invested or involved, can you talk about what the basis trade is? Because I want that defined because it's such a huge opportunity when it exists.
Yeah. So at the very simple side, you're going to own Bitcoin as the physical Bitcoin, and you're going to sell futures. Futures typically trade at a premium to Bitcoin. So for example, Bitcoin is around $47,000 today. If you go out on the futures contract 2-3 months out, you're going to see it higher than $47,000 by some percentage. And so that is close to a risk-free trade because you're long spot and you're short futures. So as the futures price goes up, so does the spot. So it helps to protect your margin. But what happens is as the strikes come in, you just keep the premium. So basically that percentage is something that you get to pocket while you're maintaining a limited risk of price volatility.
Yeah, so that's basically when the market is in contango. And to what you mentioned before, we had this brief time when the market crashed and futures were actually priced below spot, which is called backwardation, and that opportunity disappeared. And why that's important, I think, for a lot of people to understand is when you're getting yield on a lot of these platforms, that's how they're giving you this yield, right?
Yeah, absolutely. It's one of the trading strategies under the hood that most of these platforms are using, which fuels the market. And it does definitely fuel the more deposits, the more interest, the more these trading strategies that go on. And it just keeps a healthy two-sided market going.
One of the first questions I always ask you every time we talk is what kind of user growth are you seeing at TradeStation? Because to me, that's the greatest single metric of mainstream adoption, right? Is like how many people are signing up, how many of them are actually using the platform, and how you're modeling that out for the future. Are you still seeing, I know we had ridiculous growth in the first quarter of the year. Are you still seeing that level of growth?
So yes, we are. Well, January was out of this world. Like January is something that you have to just take out and normalize the data, but we're still seeing really a continued growth and interest and excitement that we're beating our metrics, internal KPIs month to month as we keep continuing to grow the business. Seems like people like what we're doing, which is good, and they seem to grab value, and it's exciting to see how the retail participants come in. The institutional side has been a bit surprising for us because we've had a huge uptick on institutional interest in what we're doing. But both sides have been very, very positive for our business. What's been surprising for us to see is the adoption of volatile ETH. It used to be that Bitcoin was about 80% of our volume. And over the last 3 months, ETH has been over 2/3 of our trading volume, which is incredible.
It's incredible. And that, I think that was like one of the most understating wow metrics in Coinbase's Q2 report, right? When Coinbase reported their Q2 earnings, and Ethereum had a higher volume even on Coinbase than Bitcoin.
Yeah. I mean, we see it like
why do you think that is? Why do you think that is?
Well, from the retail side, folks generally like lower price assets. There's a perception that if I have 10 Ethereum, it's better than 1 Bitcoin.
Right.
Generally retail tends to go to some of those lower price assets. However, behind the scenes, there's a lot of interesting stuff happening with Ethereum. There's a lot of reason that people want to have Ethereum, whether it's they want to engage in the NFT space, or they potentially want to earn some yield, or they think that this is going to go higher. What's interesting around ETH, we just had the London fork, and that's getting us much closer towards the next ETH 2.0. So with each advancement towards the ETH 2.0, it becomes less risky to stake your assets. And so more and more assets are getting locked up into the ETH 2.0 contract. And there's just a really, really interesting shortage of supply on ETH. And I've read a few different folks that are comparing it to early days in Bitcoin when there was a supply shortage, I think early 2020 on Bitcoin. So this could be really explosive if this does continue to take off.
Yeah, people have sort of alluded to it as like a triple halvening with EIP, and now we've seen in about a month, I think, since the London hard fork with EIP 1559, almost $500 million in ETH already burnt. So, I mean, do you see that with all of these sort of that slightly deflationary aspect, the demand, do you think that there could be a legitimate supply side shock on Ethereum? I know that we've seen it on Bitcoin, as you said, but do you think that that is a legitimate reality?
I think it's very possible. Definitely, when you look at the one-way nature of the staking, where it is one directional for ETH 2.0, you're not getting it back unless you go to ETH. So more and more folks are getting access to staking, more and more folks are getting access to participate, and it's likely that we're going to see a supply shock in Ethereum.
So you said that you're seeing a lot more institutional interest. I want to talk about that because that's such a interesting narrative that goes all the way back to 2017 when prices went up to 20,000. Everyone said it must be because institutions are here. Clearly, that was not the case. It was fully a retail bubble, right? And now we had obviously this last year, almost a year ago, or just over a year ago, MicroStrategy, as you alluded to, started buying. We saw Tesla buy. Then there was this huge meeting where Michael Saylor in February had 2,000 executives, and we expected to see this huge boom in companies adding Bitcoin to their treasury, and it was sort of crickets since then. My feeling, obviously, is there's a lot of due diligence being done, and that will happen. But what are you guys seeing? What are the institutions that you're seeing? What kind of institutions are you talking to? Is this crypto native hedge funds? Is it corporations? Who's coming to you guys?
So I think that there's a couple of things there that are interesting to look at. Regarding the MicroStrategies component, I think that even Saylor said it's going to take about 6 months for folks to really get engaged. So we may still see that. We may see that in the Q3, Q4 earnings. So I'm still watching for that. When it comes to the institutional interest, well, I can answer it in two ways, which is quite unique. One of the ways is I used to be able to hire from banks and from funds and traditional finance that didn't have access or weren't planning in crypto. That well has dried up. Either those folks have gone to crypto, and even the crypto folks at the different firms, they're not interested to move because of the projects that they're working on. So definitely there is activity happening in these various firms, whether they're banks or larger funds or other brokerage houses. In regards to the interest of people coming towards TradeStation, we didn't anticipate that we'd have the level of interest because we have under TradeStation, you have the securities broker dealer with options, futures, and stocks. And then under the crypto entity, we have crypto. It's gotten us a lot of really interesting conversations with folks that are doing the basis trade, are looking to engage or some form of borrowing and lending, are looking to open up accounts with TradeStation because they want to be able to transition across multiple asset classes. They are definitely very, very unique conversations that we're having. We are having conversations with companies that are, let's say, an insurance company, and that company would like to do something in crypto, but it's not what you would expect from an insurance company. It's not so much around payments for insurance, or even corporate treasury. It's how do they use crypto as an employee retention program? Instead of offering a traditional 401k, what can you do with crypto, whether that's through education, through match contributions, through bonuses? Those are the conversations we're having, which are really unique when you look at what we offer and how companies are looking at challenges that they have, and if crypto can solve those challenges. We're having conversations with RIAs and fund managers that are much larger than the companies that we would normally have conversations with. Out of the event that we met in Miami, we had tremendous, we walked away with some really impressive leads, and those conversations have led to some great business opportunities. Some of them at sizes that are even bigger than the TradeStation balance sheet, which is quite impressive. So we're seeing a lot of interest and a lot of the conversations are not us trying to convince people to get into crypto. The conversations are now, what do we offer and how can we help them get into crypto, which has been a difference. I'm no longer chasing people. They're coming and actually shopping for solutions. Right.
So that said, what are the barriers to entry still for them? A lot of people talk about an ETF, obviously being sort of the instrument that would open this massive wall of money to the pensions and larger institutions and endowments, and really the trillions that are waiting on the sidelines in theory. So are there still things when you have these conversations that they're asking, I'll come in when you have X and you don't have it yet?
So to get to the real big scale, like the pension funds and at that size, the banks need to get involved. TradeStation is big, but we can't service $1 trillion fund.
No.
I would love to, but they're going to look at us and then say, well, I can go and talk to Goldman or BNY Mellon, who has multiple times the size of their own balance sheet. Those conversations, they have to happen. And in order for a large pension fund to come in, even let's say Google, for example, Google has a huge treasury. In order for them to get involved, they need to be working with their bank to get in. And it's not there yet. But like I had mentioned before, I can't poach those people. So they're working on stuff. And they shared some of the things they're working on. It's super interesting. But that's one of the main hurdles, is that the some of the large major banks that service these big customers are still tiptoeing down the pathway for the solution. I do think the ETF is going to help unlock a lot of capital. I don't know whether that's going to happen this year. I think there was a lot of hope that it would happen this year. Maybe we will see that. I think there's still some market infrastructure that needs to be put in place for the ETF to be able to be really successful. Let's keep in mind, if you are interacting with an ETF at an institutional level, you're probably also interacting with the underlier at the same time to hedge your strategies. And if you're Morgan Stanley, you're not maybe as comfortable to or able to get into this market yet to be able to play both the ETF side and the underlying spot side.
And it seems that at least I agree with you. I don't think we'll necessarily see it this year. They're definitely dragging their feet and doesn't seem to be a top priority for the SEC at the moment. They have tipped their hat that maybe a Bitcoin futures ETF would be possible. Do you think that that would serve the purpose of a pure Bitcoin ETF, or do you think that it's just a step?
I think it's a step, but it's a pretty big step. Even if you look at some of the main gold ETFs, a lot of them are based on futures, and most people don't care. It's not that it's not tied directly to spot. I think that I know there's a lot of capital tied up in the sidelines just waiting for a path in. And if you're a money manager, it's going to be very hard to tell your customers that you're not putting any exposure to a Bitcoin ETF just because it's a futures product and not a spot product, because your competitors definitely will.
It's crazy because I wouldn't have thought we'd be having that conversation even a year ago. It still felt like if you were a risk manager or a portfolio manager at one of these companies, you were the crazy guy if you mentioned Bitcoin or crypto, right? I would say you had reputational risk if you even brought it up at a meeting. And now I think that's flipped, where you have reputational risk if you can't answer the questions about it.
Yeah, I think you're exactly right. There are still a large group of people that are not interested to participate or not willing to look at it, which is fine. We need buyers at 500,000. So I'm okay that they can take the time to get involved. But you're right that the conversations have shifted, and not having a strategy or a plan definitely puts you at risk with your customers, because your competitors are having those conversations and they have strategies and plans. And the reality is the investment public wants exposure to these assets. And so it's being driven from mom and pop, and that sort of pushes all the other infrastructure providers and players in the space to have to deal with it.
Right. Yeah, that makes perfect sense. I just happened to be looking at the comments, and there's a great question from Aaron Bryan. Thoughts on the 4-to-1 bull versus bear market cycles for crypto? I've seen a lot about this based on the Bitcoin halving cycle, real or fake. Do you have a thought on the 4-year cycle of Bitcoin?
So I'm playing it. I see it. I'm playing it. I think what's not entirely clear to me, and if you follow, I think you've had some great conversations on this, even Lily Wu. The question is the cycle still in play? It very clearly was in play. Now, the first and second, and even the beginning of this third cycle, the pattern has repeated itself. The question becomes, does it extend, and does it do something that we're not expecting? Where this cycle should likely end somewhere in the end of Q4, beginning of Q1 next year, depending on where you draw your reference points. I still see that you're going to have this interesting explosion of price up specific to Bitcoin. The question really is, when it goes up, how far is it going to come down after it crosses past the top? What's different now is the players that are coming online to provide access. So if you look at even our competitors, so TC Trade, they've got a crypto offering. Interactive Brokers is planning to do an offering towards the end of this year. Those are big firms. And when they open up access to trading the spot products, it's going to bring a lot of money into the space. And firm like Interactive Brokers is around the world. So it opens up access to that capital. And there's many other firms like that are coming in and providing offerings, whether it's a bank, whether it's a trading platform. So more people have access to this market. And as we go up and try to put in a new top, and eventually it comes back down. The question is, how far will the market come back down? Because you have this pent up demand that's slowly, well, I think it's not so slow anymore, but very quickly gaining access to it. I tend to think that this cycle is going to extend and it's going to create a new shape. So it won't just do the same thing it has done the last 2 years. But I don't have any evidence other than the amount of new participants that are large customer base participants coming in is pretty big.
So it's the idea of the institutional floor somewhat, which we've seen. But once again, when we went to 65,000, people talking about the super cycle and that concept, we're already saying, yeah, we'll never see a retracement that big again. And boom, 57% retrace. It's not 85.
Yeah.
If it could be. Yeah, I have no idea what will happen in the future. I tend to agree with you that it will go up. But did you anticipate or see a drop that large coming at that point in the cycle? I didn't, right? I thought 42K, we'd go down to 45K, something like that. 29 surprised me.
Yeah, I knew we were going to go down, but 29 definitely surprised me. This is the challenge with trading, is that when things are going well, you tend to forget that it can cut back the other way really quickly. And so you tend to block stuff out. And I always knew that there was going to be some sell-off. 29 really surprised me. I think you and I had chatted before. You had some sell orders way down there that got tagged that were just shocking.
Buy orders. Buy orders, not sellers. Just so people are clear, I was not selling the bottom.
No, buy it. My mistake. Sorry.
No, it's fine.
But it was super interesting because they were really like lotto tickets. Like, yeah, it would be great if that hit.
It dropped below 50 and I bid all the way down to 30 as almost a joke. But one of the greatest trades of my life was March 12th of 2020. I talk about it all the time. That was when it crashed massively from 9,000 to 6. I went to bed. I put bids at 4 as a joke, just like it'll never get there, but it might. I woke up 12 hours later. Price was still 6. I went about my day, and an hour later realized my bids had filled overnight when price dropped to 3,800, and I was up 50%.
Yeah, that's incredible.
Those are the best trades. I mean, the best trades, I always joke, are the ones that you buy in your sleep that you expect not to fill.
Yeah.
So what you talked about then, we're talking about the cycle, but in your estimation, what are you seeing for the rest of the year? And I know you and I both alike hate to put like a price prediction on a certain date because it can only make you look like a fool, the odds of it happening. But generally, from a trend perspective, what do you think we'll see in the third, fourth quarter, end of the third and fourth quarter?
So looking at the charts and looking at the data that I'm looking at, it looks as though that the price is going north of here. We're going to look to try to put in a new high, would be my estimation. Where we place that high is not clear. I think that in my experience in the market, it's going to do something that we're not expecting, and it's going to do something higher than we really expect.
Always.
It won't be for a long period of time. It'll be very quick. So you got to be ready to make your move if you decide you want to sell at the top or try to. But through the end of the year, we're really looking for continued upward movement, continued interest in both Bitcoin and Ethereum. A lot of the altcoins also, where there's excitement, there's real enthusiasm, and there's inflows of capital from existing players that are accumulating, and there's inflows of new capital that is trying to start to accumulate. So I'm looking higher than we are now by the end of the year. How much?
Me too.
Yeah.
Who knows? Who knows? $7 million by next week. Engagement. Everybody's watching now. I said it. No, obviously, guys, that does not exist. But yeah, why not?
Did you read about the billionaire flipping in at $1 million? The number of crypto billionaires will be double the number of traditional non-crypto billionaires.
That's just crazy. I was talking to Steve Stoneberg from Bittrex Global, and he sort of alluded to that idea that first it was the bankers were extremely wealthy, and then the hedge fund guys became the billionaires, and they had the bigger house next to the banker. And now it's like Sam Bankman-Fried's 28 and has 10 times as much money as any of the hedge fund guys. So that there will be a flippening of crypto billionaires, but they'll be like guys with unkempt hair in their basement playing video games, right?
Yep.
Yeah, it's pretty insane. So what are you guys, with that in mind and that future in mind, what are you building at TradeStation? What can we look forward to from you guys to keep capturing this market and providing for your customers?
So we see actually the prior speaker was talking about crypto IRAs. We definitely see that as a growth opportunity for us. We're expecting to have a service that it supports IRA or qualified accounts before the end of the year. Interesting part with what we're doing is that we're trying to, it's complicated now. If you want to try to have an IRA account, there's potentially some LLC involved. If it's not an LLC, then the fees are quite ridiculous. So we're adding that to our offering. So a customer can have an equities IRA that trades stocks and options and then paired with a crypto IRA. So you trade all three asset classes under one hood. So that's really exciting for us. Also, again, going to be pretty low cost because we have a lot of other business lines, so we don't have to we don't have to make it on the specific transaction. That side, we're looking at a lot of new coins. Those are definitely growth areas for us. I can't tell what coins and when, but that's a very interesting area for us. And then also consolidation of the overall products, bringing the crypto closer to the core offering so that you have a single platform to trade all the asset classes. So a lot of focus on customer experience, a lot of focus on helping people with their retirement, and then bringing other new assets in that the customers are really looking to trade. That's going to be more on the retail side. On the institutional side, simplifying a lot of the workflows we do. We've got customers that come to us for a variety of different options, different products, and trying to really unlock the power of the basis trade, trying to leverage all areas of the business to make a really smooth experience for the institutional trading firms, as well as the non-traditional trading firms, like I mentioned, the insurance company or some of the other firms that want to support crypto for interesting use cases outside of trading. I think that's what we're really, really excited about.
Talk about listing new assets, and I know that's a huge challenge, especially for exchanges that are operating in the United States. How do you vet a new asset and decide what you're going to list, and how does it pass the test?
Wow. So you get a lot of gray hair. You have a lot of battles. The SEC has published a framework on digital assets. That's one of the frameworks we follow, which is an assessment of whether or not the asset is a security. That's one of the key things we're looking for. There's a variety of other analysis that goes into play, but security, yes or no, is a big one for us. The AML and crime risk is definitely another one for us. We do look at the overall volume of an asset to see will it be something that's around for more than just a day? Because it's so expensive for us from a human capital and development perspective, we're trying to focus on the assets that have the most interest from the marketplace that look like they're going to be around more than just a week or two as a fad.
So you're not adding the third iteration of a dog coin because it's got really cool memes?
You know, I would love to. It's just not something that, I think there's a higher demand for other assets that we probably won't get to that one anytime soon.
Yeah, you guys can't move quite that fast, I guess. Before, yeah. And then it's gone a week later, I'm sure. Anyway, so how many assets do you guys have listed at the moment in the crypto side?
So we currently have 6. That will be steepened up pretty soon here.
How soon? You can't tell me.
I can't give it away. But you know, for us, when we look at this, I think it's something around 75% of all crypto. 70% of all crypto volume happens in Bitcoin and Ethereum.
Sure.
And so we're capturing. Our customers definitely want other assets, but we're capturing the largest amount. And what we do see, because we focus on those 6, we get a lot of folks that are putting larger positions on, and then they want to branch out into some of the smaller coins, but not with huge positions. So we're evaluating whether there's even how much emphasis to put on the coins. We know we need them. They're coming. I can't tell you when, but sure. I'm definitely going gray over it though.
Yeah. So stepping you back from TradeStation as we sort of come to the end of our time in the next couple of minutes, what are you excited about that's happening in the crypto space? Is it DeFi? Is it NFTs? Is it the Ethereum flippening? What are you looking for that's exciting you?
So I am very excited about it's NFTs, but it's not so much the JPEG component of it. I'm really excited about the community aspect of this, where we're able to now tokenize communities. I recently went down the rabbit hole, like Gary Vee's token, where he's using this in order to, if you want to do business with Gary Vee, he's going to ask you to buy some of his NFTs as a kind of join the community, help us grow this community. The other one that's interesting is the Bored Ape Yacht Club. Definitely not saying to go buy these, but a community has sprung up around these tokens where you have access to specific events. There's different airdrops. So whether or not any of those actually survive, the idea of being able to tokenize culture and community is really interesting, potentially much bigger than crypto, just looking at kind of spot Bitcoin and Ethereum. That is very exciting. How that plays into the metaverse is very exciting. We are having conversations in both of those realms, and things that are difficult to comprehend are like difficult to wrap your mind around. We're having those conversations. For example, there's a good partner we have that's basically saying that they're not going to have a website anymore. They're going to have a metaverse presence so that their customers can come in and they can experience that brand and that company directly in some virtual metaverse world. And they bought property, they hired an architect, they're designing an office, and they're going to use that not only to bring customers in, but also to attract and retain talent. And their position is that websites are two-dimensional, they're of the past, and that experiences and interactions are going to be the future. And these are some of the smartest people I know. So seeing that is pretty interesting. We're talking with a few different brands and organizations that are trying to figure out how to bring crypto into their worlds and their ecosystems, and in use cases that are well beyond the simple payments type use cases, more around community, more around trying to interact with their community. I mean, if you think about what you get to do, typically a business is designed to extract value from their community. When you start developing communities around NFTs or tokens, the community is able to extract value as opposed to the business extracting value. And that's a very interesting flip of the business model. And it becomes really important because the brands and the business now need to make sure their community is able to get value as opposed to just trying to harvest value from the community.
I know we're at the end of our time here, so I'm going to say that next time we do this, we can wear our black shirts and have the meeting in the metaverse.
I would love
it. Ladies and gentlemen, James Putra, VP TradeStation Crypto. And once again, thank you so much to Benzinga for having us on. This was great.
Thank you guys. Today I learned that the website is so 1990s, and we're not doing that anymore, apparently.
Never.
Yeah, you can fax me if you want to talk about it.
All right. Scott, thanks a lot. James, thanks a lot.